Question here from Julie. It's kind of long. I'll try to summarize it. But can you talk about the investment thesis around diversifying exposures within the same theme? For example, Keith invests in multiple flavors of short-term treasury cash trades or many different iterations of the gold theme. I imagine there's some diversification benefit from risk management, but you'd also expect the positions to be highly correlated. Thanks for your feedback. Love the product and trying my hardest to forget my old wall upbringing. So I guess, yeah.
Yeah, I mean, when we go, that's a really important question. Like when we have, was it Julie?
Julie, yeah.
I think Julie is. So if you have, like in portfolio solutions in the MoFo, if I have, like back then, when I had all those fixed income positions and gold positions, like I was, to the point, not diversifying on those, I was going big in those, right? I had something around 35 longs. At least a third of them were that rate sensitivity, right? Because they're just take 12 positions, right? I was long gold miners both ways on junior miners, gold, silver, physical gold, bond yields, right? Like the inverse of bond yields. That was in quad 4, right, Julie? So at least a third of my portfolio got pushed in there. And then once quad 4 came out, I took that concentration right up. Now I didn't take it out perfectly in gold. I'm not perfect at anything taking out. I'd argue that I'm pretty damn close to perfect on TLT, but you know, that a third is really not, that doesn't mean we're not diversified, right? Because you know, if I look at it today, the portfolio solutions product today, it's, you know, what I was doing on Friday. So first, before I go to that, step back. If I go and I put a third into two different things that is really the same thing, which is rate sensitivity, gold and bonds, right? That's an explicit leaning of the portfolio, but it's not taking, you know, the other 2/3 and changing that too. And that's when you will see me double down or triple down. So we also had, we were two ways on utilities there. It was pretty defined bet, but you know, generally speaking, Julie, as you know, we're, I think, one of the only firms that help people make money during a quad 4. So almost every quad 4 that has hit, we've nailed it. So I don't really need to diversify. I need to put that bet on, or I don't need to keep diversifying. I need to get more concentrated in where I can make money. Okay, but still I have the diversification. Right now, if I look at today, it's like just looking at my notes. I mean, we're diversified. I mean, what I did on Friday was I added 6 different things that could help me be more diversified, you know, towards growth and inflation. See how I did that? Right. So if I added, well, I added block, ETHA, PSCE, right? So those only one of those things is inflation. All right? No, all 3. That's 3 ways on inflation. But then I added IPO, S&P momentum, which is growth, right? Or is that inflation? No, it's growth, right? And what was the other one I added? I added a country. I also added cyclical growth through industrials. So that, like, again, I got XLI, I got EWC, I have S&P momentum. No one would tell you that that's not diversified, just those 3. Right? That's a country ETF that's coming out of a recession, Canada. That's S&P momentum, and that's cyclical momentum. Okay? So I'm constant, like I didn't go 2 ways on industrials. I didn't go 2 ways on Canada. Now, if we get really bullish on Canada, I'll probably buy small cap Canada. So constantly trying to diversify, but still not afraid to have some concentration within the diversified bets.
Hedgeye's Cyber November deal is here. Get the best deals we offer all year. Scan the QR code to find out more.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.